Well, they're beneficiaries of falling crude prices, and we now have Mahima joining us to tell us about how things could potentially pan out for those in the Indian stock market. Mahima, good morning.
Good morning, Agam. So, in terms of how crude prices have fallen, and we've seen that Brent prices are down 15% since July 24. Now, there are several beneficiaries of this falling crude price. Paint companies, of course, because crude is a raw material for them. 30 to 35% of their raw material comprises of crude, and paint companies use crude derivatives. So, cost of raw material falling down means good margins for paint companies. Now, Indigo Paints did touch an intraday high of 5% almost on the back of this news. Asian Paints, Kansai, Nerolac, Berger Paints are also did touch. All of these companies did touch an intraday high of roughly 2%. Now, the second sector that could be that is a beneficiary of falling crude prices is aviation. Well, falling crude prices means that aviation turbine fuel will be available at a cheaper rate, and Indigo and SpiceJet could be possible beneficiaries of this. Next is tire. Well, tire industry uses crude derivatives for raw materials like synthetic rubber, chemicals and carbon black, and this roughly accounts for 30 to 35% again for their raw materials as well. So decline in crude will of course impact and improve their profitability as well as their margins. Some stocks that could benefit from this include Apollo Tires, JK Tires and Seat. Now lastly, lubricants, well, they use crude oil derivatives like base oil and additives, and this comprises of 40 to 45% of their total raw materials. So fall in crude price will improve their overall operating margins, and a major beneficiary from the lubricant space will be Gulf Oil. So these are some of the stocks and counters that will benefit from falling crude prices.
Indeed, Mahima, that is where the space is, and that is all the green that you're seeing in the street today. Castor oil as well, looking fairly well placed. And of course, with Gulf Oil, there's so much more going for them, right? They ventured into AdBlue. They seem to be growing at double the market. That, of course, the sector is. And importantly, their margins also stand to gain if crude prices continue to remain lower. Anuj Gupta, now head of commodity currency at HDFC Securities, now joins in. Anuj, one and the only positive this morning for Indian markets is the fact that crude tanked nearly 5%. Do you expect it to decline further? Because one, it seems like Libya production is back on, and if it's going to be risk-off trade for the next few days, it may add to the losses on crude prices. How would you approach crude at the current level?
See, as per current level, we have seen that it's trading below $70 per barrel on a WTI mode. And even we have also seen that Brent is also trading below $75 per barrel. So both are on a negative trend. And in this last month, we have seen almost 5% correction. And even yesterday, we saw more than 4% correction in the crude oil prices. So overall trend for the crude is negative on the back of weak demand and also increase in supplies. And for the US side, if we see, stockpiles are also increasing, and the driving season is also going to close down. So possibly the supplies will be on an increasing mode in the coming months. So definitely that supply will more and the demand will low. Definitely that will impact on crude oil prices. So expecting further downside in the crude oil prices. On MCX side, we are recommending sell position on the crude. One can sell crude oil around 5920 with the stop loss of 5980 and expecting 5825. And in international market, WTI expecting 67, 65 odd levels, and Brent may test $70 per barrel. So both are on a negative note, expecting again a further decline in the prices.